So big central bank decisions coming up tomorrow. Australia, India, analysts saying Australia will cut, India will not. What's your take?
My sense is that both are going to very firmly move to an easing bias. Whether or not they actually pull the trigger right now is less than certain. But however, you know, these two meetings you mentioned come on the tails last week of a whole range of central bank actions, and the overall bias, frankly, is to move to a slightly more easier, accommodative monetary policy. There's no surprise in that. You know, the US dollar is getting stronger. It tends to have a tightening effect at the monetary level of sucking out liquidity from the country. So there's every reason why I think central banks are going to remain as supportive as they possibly can.
Is it too far-fetched to say that there's a coordinated policy? You see that the Swiss central bank ends the peg just before the ECB announces enormous quantitative easing. Not a coincidence. Not that anything was said, I'm just looking at the overall picture. And then, of course, you've got 12, maybe 13, maybe 14 central banks in the space of a month easing.
Well, look, I think you're absolutely right in the sense that all eyes are on the Fed. They're ostensibly moving towards a tightening bias when QE finished. And there is a broad sense that central banks at the global level will pick up where they left off, and the Fed will likely tighten at some point this year or next year. And we need to have some sort of offsetting or countervailing easing from other central banks. Certainly the ECB.
It can't be a coincidence, Johnson. What's the word from the floor? Come on.
No, I mean, I don't think. I don't think that fixed income. That whole team in Citi. Look, I mean, I'm pretty sure there's not some secret conspiracy theory to around Asia.
Yeah, or John.
Do you think Janet Yellen is getting it right? You know, if you look at her performance from a year ago to today. How do you assess it?
You know, that's a very good question. There was one comment in the FOMC minutes last week which caught my eye, and that was this inclusion of so-called international developments as part of their assessment of whether or not or when to raise rates, because, of course, the international dimension is extremely important. I discussed earlier how I think it's heavily influencing the back end of the US yield curve, and certainly there's very few signs at the international level of any major growth stimulus coming through. Yes, the US is strong, but increasingly people are thinking now, how long can the US actually withstand that deceleration in growth at the global level, or more particularly that deflationary undertow that seems to be becoming more and more evident now, particularly in Europe. So the international development comment that she made, I think, is really critical, because if they start to think about that more importantly, then I think that, for example, Citi's call is for interest rates to be hiked at the back end of Q4 of this year. But if inflation numbers start to come in a little bit weaker, and we start to see, for example, a bit of more of a slowdown in consumption, then maybe that gets pushed back. I mean, certainly the market is, uncertain about when that is going to be.
But do you think that the markets have moved ahead of themselves? I mean, what? Some of these yields are basically negative. Some of these yields are multi-year lows. You know, how far can this go? Well,
listen, if you listen to the Fed governors and the Fed themselves, and absolutely the market's got too far ahead of it. You know, the Fed are signalling very clearly to us that the labour market is in extremely robust condition. And on that basis alone, there should be some rate hike. It's the international dimension, of course, which is causing some questions to be
Isn't that like the key question here? Like, what are markets looking at right now? Because earnings season in the U.S., and that looks pretty good.
Earnings are fine. I mean, from an equity perspective, we are looking more now at valuations. I mean, the earnings seems to be coming through, but you know, either on a cyclically or just spot PE basis, there's some concern over whether that actually represents some value. But again, this is more a larger, bigger picture of the effect of QE and diminishing liquidity flows outside of the United States. You know, we're positive on Europe. And the reason why we're positive on European large caps is because we expect quite a boost from Mr. Draghi's QE exercise. We remain positive earning equities in the US large cap as well, because we think they will continue to
But the dollar has been a bit of a problem for at least the Q4 earnings, right?
Yeah, well, that again, I mean, you put your finger on it. It's the dollar. Yeah. It's absolutely a dollar story. And there is some indication, actually, from the GDP numbers on Friday that the stronger dollar is actually having some impact now, particularly on Dow earnings, which tend to be more manufacturing-based, and also the trade balance in general. But yeah, I mean, if we look at the dollar and its potential impact on currencies and liquidity flows right across Asia, it's really, really important, which is, to your point, your original point, why I think it's so likely that we will see continued easing and continued accommodative monetary policy across the Asia region.
What right now is giving you the biggest fear?
Yeah, it's the dollar. It really is. It's the
Getting
dollar.
stronger.
It's the potential impact, the so-called sucking sound as liquidity moves out of the region.
The emerging markets.
It really is that story, and you know, we have to wait with bated breath to see if there is an interest rate hike, what that interest rate hike will have on the value of the dollar. If it starts to spike higher on the back of interest rate differentials, which is kind of inevitable, then not only do we have to incorporate the stronger dollar, but let's also bear in mind the yen has actually depreciated since 2012 by about 50–60%. There's a huge amount of competitive adjustment that needs to play through right across Asia just to return that balance, that relative competitiveness.